All right, so you're ready to become a better trader.
Yeah.
And you've handed us a pretty hefty stack of resources to sort through.
Yeah.
Including this one, The New Trading for a Living by Dr. Alexander Elder.
It's a classic.
Yeah, and from what I'm seeing, we're going to be exploring the psychology of trading.
Oh, absolutely.
Market analysis, risk management, even taking a look at Dr. Elder's own trading journal.
He's very open about his experiences.
Yeah, and I think this could be a fantastic way to accelerate your journey to becoming a more successful trader.
I think so, too.
So one of the things that really struck me is that Dr. Elder, he's a psychiatrist turned trader, which is...
It's a unique perspective.
Yeah.
He brings that psychological insight to the world of trading.
Yeah.
And really emphasizes the importance of the mental game, which, as he learned the hard way, is often the biggest obstacle to success.
Yeah, and speaking of learning the hard way, I noticed that he talks about how he initially thought trading was easy after a few early wins. It reminds me of those stories you hear about people winning big at the casino on their first trip.
Oh, yeah.
And then, of course, losing it all later.
It creates a dangerous illusion of control.
Right.
You think you've figured it out, but the market has a way of humbling you.
For sure.
Dr. Elder compares trading psychology to alcoholism. The thrill of the win, the fear of missing out.
Oh, wow.
The tendency to chase losses, it can feel like an addiction.
Yeah, that's a powerful comparison. I mean, if you think about it, recognizing those addictive patterns, not just in ourselves, but also in the market itself, that's essential for making those rational decisions.
Absolutely.
He even suggests setting up a Losers Anonymous for traders.
Yeah.
I wonder what he would think about a Gamblers Anonymous for those casino winners.
Probably say they're dealing with the same underlying psychological forces.
Yeah, for sure.
That need for self-awareness and the ability to manage emotions.
Right.
He also emphasizes keeping a detailed trading diary. It's not just about tracking wins and losses, but analyzing the emotions and thought processes behind each trade.
I think that's such a great point. And this is something that could be valuable even if you're just dabbling in day trading or trying to make sense of your investment portfolio.
Absolutely.
It's like holding up a mirror to your own behavior, What self-destructive patterns are you bringing to the market?
Exactly.
Are you chasing quick profits, ignoring risk management, or blaming external factors for your losses?
Yeah, these are things a diary can help uncover.
Okay, so now Dr. Elder shifts the focus to the psychology of the market itself.
The market as a crowd.
Yeah.
A collective entity driven by fear and greed.
He uses some vivid language.
He does.
He talks about battles between bulls and bears.
Yeah.
And how price movements reflect a consensus of value shaped by the mood of the crowd.
It's fascinating.
Almost sounds like he's describing a sporting event.
It does, doesn't it?
Yeah.
And just like a crowd at a sporting event, the market can get swept up in emotion, creating opportunities for those who can stay objective.
So you're saying we need to stay calm.
Exactly.
Even when everyone else is losing their heads.
Precisely. Dr. Elder warns against relying on insider information.
Interesting. Why is that?
Because even that gets filtered through the lens of crowd psychology.
So it's not enough to have the information. You need to understand how the crowd is interpreting it.
That's right.
He even gives examples of institutional traders who receive the same information but make different decisions based on their own biases and the prevailing sentiment in the market.
Exactly.
So how can someone new to trading even compete with these institutional giants? It feels a bit daunting.
It can be. But that's where charting and technical analysis come in. Dr. Elder provides a really detailed overview of the evolution of charting, from classical patterns to the computerized methods we use today.
I was surprised to learn that the basic principles are still relevant.
They are, and that's what's so valuable about Dr. Elder's approach. He connects the historical context with modern techniques, highlighting the significance of concepts like support and resistance levels.
So those are still important.
Oh, absolutely. He even uses the example of gold repeatedly hitting resistance at $1,000 an ounce before finally breaking through.
It makes me think about how important it is to identify those key levels where buying or selling pressure is likely to be strong.
That's right.
And this could apply to any market, not just gold.
Absolutely. And that's why he spends so much time talking about trends and trading ranges. He emphasizes that markets spend most of their time fluctuating within certain bands.
Okay.
Which means you need to adjust your tactics accordingly.
So trend-following strategies that work great in a strong uptrend might lead to losses in a range-bound market.
Exactly.
So we need a toolbox of techniques to navigate different market environments.
I like that analogy.
I notice he discusses a range of computerized analysis tools.
He does.
He categorizes them as toolboxes, black boxes, and something called gray boxes, though he doesn't really explain what a gray box is.
It's a bit of a mystery.
Maybe it's a hybrid approach.
Possibly. But he stresses that no tool can replace a deep understanding of market dynamics.
Right.
He cautions against relying on black boxes, which spit out buy and sell signals without explaining the underlying logic.
So you need to understand why you're doing what you're doing.
Exactly. And remember, markets are constantly evolving, and no algorithm can fully capture the complexities of human behavior.
Okay, this is all starting to make a lot more sense.
Good.
But I am curious to hear what he has to say about risk management.
Yeah.
He seems to have this framework called the iron triangle.
Oh, yes.
What's that all about?
Okay, imagine a triangle.
Okay.
And at each corner, you have psychology, tactics, and money management.
Got it.
That's Dr. Elder's iron triangle of risk control. He argues that all three are equally important for protecting your capital and preventing catastrophic losses.
So it's a holistic approach to managing risk?
It is. He even uses vivid imagery like shark bites and piranhas to describe those sudden, unexpected losses.
Yeah, shark bites and piranhas. Okay, I won't be forgetting those images anytime soon.
They stick with you.
So how do we protect ourselves from those piranhas?
He introduces rules like the 2% rule, which limits the amount of risk you take on any single trade,
Right.
and the 6% rule, which does the same for the entire month.
Okay.
He emphasizes that these rules are like guardrails, preventing you from driving off a cliff, even if you make a wrong turn.
This is starting to feel like more than just a deep dive into trading. It's like a deep dive into ourselves.
It is.
Our tendencies, how to manage our own behavior before even thinking about managing our money in the market.
Exactly, and we've only just scratched the surface.
We'll definitely need to dig deeper in the next part.
Right.
We have a lot more to unpack with Dr. Elder's insights.
I'm looking forward to it. Me too.
All right, so now I think we're ready to tackle the more practical side of things. Dr. Elder seems to really emphasize this idea of having a well-defined trading system.
Like a roadmap to guide your decisions.
Right.
A system helps you navigate those emotional ups and downs that, inevitably come with trading.
Yeah.
And what's interesting is that he differentiates between he calls mechanical systems, which rely on strict rules, and then discretionary systems,
Okay.
which allow for more flexibility.
So kind of like choosing between driving an autonomous car
Yeah.
or one where you're in control.
That's a good analogy.
But even with a self-driving car, you still need to, know where you're going and how to handle those unexpected situations, right?
Of course. Yeah.
So does Dr. Elder address that?
He does. He argues that even discretionary systems should have some non-negotiable rules in place,
Okay.
especially when it comes to risk management.
So it's like having a set of safety protocols no matter how experienced you are. So, okay, let's say you want to build your own trading system. Where do you even begin?
Well, he recommends starting with back testing, which is essentially testing your system on historical data to see how it would have performed in the past.
So like a flight simulator for traders.
Exactly. You can practice your skills and refine your approach without risking real money.
I like that. That's a good way to get a feel for the mechanics before you're actually under pressure.
Yeah, and just like there are different ways to practice your golf swing, there are different approaches to back testing.
Right.
You can use automated software or do it manually, one bar at a time.
Does Dr. Elder have a preference?
He advocates for manual testing because it forces you to think through each trade decision and develop a deeper understanding of your system's strengths and weaknesses.
So it's more time-consuming, but ultimately more rewarding.
I think so.
It's like taking the scenic route instead of the highway.
Yeah.
You might get there a little slower, but you'll see more along the way.
That's a great way to put it.
Now, once you have a system that you're comfortable with, the next step is setting profit targets.
Right, and Dr. Elder suggests using technical tools like moving averages and channels
Okay.
to identify those potential areas where price momentum might stall or reverse.
I'm starting to see how all these pieces fit together.
Yeah.
Understanding market psychology, identifying trends,
Yeah.
and now setting profit targets based on technical analysis.
It all comes together.
It's like building a puzzle.
It is. And he also emphasizes understanding the risk-reward ratio for each trade.
Okay.
Making sure potential profits outweigh potential losses.
Sure. Yeah.
I mean, think about it. Would you risk $100 for the chance to win $50?
Probably not.
You want that potential reward to justify the risk you're taking.
Yeah, that's a no-brainer.
Exactly.
But how do we actually limit those losses?
Right.
I mean, we talked about the 2% and the 6% rules earlier, but are there other techniques for protecting our capital?
Dr. Elder talks a lot about placing stops intelligently.
Okay.
He suggests techniques like safe zone stops, which are based on market volatility, and AKR stops, which use the average true range indicator to determine your stop level.
So it's not just about picking a random number. It's about being strategic.
Exactly. And he also recommends using trailing stops,
Okay.
which move up as your trade progresses so that you can lock in profits and reduce your risk exposure.
So it's a more dynamic approach to managing risk.
It is.
Constantly adjusting to the market's movements.
That's right.
Okay, this is all making sense, but I have to admit, I'm the kind of person who needs to see things in action to really get it.
I understand.
So I'm wondering if Dr. Elder, if he provides any specific examples of his trading strategies.
He does. He actually shares his own trading journal, which gives us a fascinating glimpse into his thought process.
Okay.
And he even introduces a system called Trade APGAR.
Trade APGAR.
Yeah.
Is that like the APGAR score that they use to assess the health of newborns?
Exactly. He makes that very comparison.
Okay.
He says, just like doctors focus on the sickest babies, traders should focus on the healthiest trade setups.
So it's about being selective, waiting for those high probability trades that meet your specific criteria.
Exactly.
Rather than chasing every opportunity that comes along.
Precisely. And that selectivity can make a huge difference in your overall performance.
Yeah, it's like the saying quality over quantity.
Exactly.
Okay, so now that we have a better understanding of how to build a system, evaluate trades.
Right.
I'm curious to hear more about the nitty-gritty details of finding those actual trade setups.
Okay.
How does Dr. Elder approach this?
Well, he emphasizes developing a watch list of stocks or other instruments that you're interested in trading.
So it's like creating a shopping list for the market.
Exactly. Instead of just wandering aimlessly through the aisles, you have a plan of attack.
I like it.
And he also recommends using scanning software to filter through thousands of potential candidates and identify those that meet your specific criteria.
So, for example,
you could scan for stocks whose moving average is rising,
right,
but whose price is still relatively close to that average, signaling a potential pullback to value.
Okay, that's a great example, It combines technical analysis with a strategic approach to finding opportunities.
Exactly.
But once you have your watch list, it can't just be a set it and forget it kind of thing.
Right? Absolutely not. Dr. Elder is big on doing your homework. He shares his own daily routine, which involves reviewing market data, analyzing charts, and even checking the sentiment of financial journalists and market commentators.
So he's really staying on top of everything that's going on.
He believes it's important to get a feel for the overall market mood before making any decisions.
That sounds like a lot of work.
It is. But remember, Dr. Elder compares trading to professions like medicine or law.
Okay.
You wouldn't expect a doctor to diagnose a patient without reviewing their medical history.
Right.
Or a lawyer to argue a case without researching the relevant laws.
So trading requires that same level of diligence and preparation?
Exactly. It's not just about getting lucky. It's about putting in the time and effort to make informed decisions.
But with all this analysis and preparation, it's easy to get, caught up in the technical details and lose sight of the bigger picture. So how does Dr. Elder, how does he stay grounded?
He uses his trading journal for more than just tracking trades. He also uses it to document his thought process, analyze his mistakes, and constantly refine his approach.
So it's like a personal coach. That's always there to provide feedback and help you improve.
Exactly. And by reviewing your journal regularly, you can identify those patterns of success and failure that might otherwise remain hidden.
Right.
He even suggests going back to closed trades months later and replotting their charts.
Oh, wow.
With the benefit of hindsight.
That's interesting. It's like watching a game replay to see what you could have done differently.
Precisely.
Yeah.
It allows you to see the trade unfold over time and identify those critical moments where you might have made different decisions.
Okay, I'm starting to see how all these pieces fit together, from building a system and managing risk to analyzing trades and keeping a journal.
Yeah.
Dr. Elder provides a comprehensive framework for approaching the market.
He does.
But I have to admit, I'm still curious to see how he applies these principles in his own trading.
Yeah.
I feel like there's still so much more to learn from his personal experiences.
Absolutely. And that's where the real magic lies, is in the insights gleaned from Dr. Elder's own trading journal.
Okay, well, what are we waiting for? Let's dive into that journal.
Let's do it.
I'm eager to see how a seasoned professional puts all these concepts into practice.
I too.
Okay, so we're finally here, a glimpse into Dr. Elder's personal trading journal.
It's like a backstage pass.
It is, right. To see how the sausage is made, warts and all.
Exactly. He doesn't shy away from sharing both his successes and his failures.
And I'm really curious to see how he applies all those concepts that we've been talking about. The iron triangle, the trade APGAR, his approach to setting stops, all that stuff.
Yeah.
Does his journal reveal any surprises?
Well, one of the things that struck me was how disciplined he is about analyzing his own performance. He's constantly identifying those subtle mistakes and biases that can creep in, even for the most experienced trader.
So even someone like Dr. Elder, who's literally written the book on trading psychology,
right,
is still susceptible to those emotional traps.
It happens to the best of us.
That's actually quite reassuring in a way.
It is. It shows that trading is a journey of continuous learning, even for the experts.
Yeah.
And Dr. Elder is brutally honest with himself, recognizing those moments of fear, greed, impulsivity that can lead to bad trades.
It's like he's holding up a mirror to his own psyche and saying, "Okay, what can I learn from this?" That takes a lot of courage, I think.
It does.
Most people would rather, sweep those mistakes under the rug, pretend they never happened.
Absolutely.
Another key takeaway from his journal is this emphasis on having a well-defined trading plan for each trade.
Yes, he outlines his entry point, his target, his stop, even his rationale for taking the trade in the first place.
So it sounds like he's approaching trading with the same level of meticulousness that a surgeon would bring to an operation.
Exactly. Every detail is carefully considered.
I can see how that would be incredibly helpful, especially in the heat of the moment, when emotions are running high.
Absolutely.
Does his journal reveal anything about how he adapts to changing market conditions?
That's another fascinating aspect.
Right.
He doesn't stick rigidly to one approach.
Okay.
He adjusts his strategies based on the prevailing trends and his own analysis of market psychology.
Right.
Recognizing that the market is this dynamic, ever-evolving entity.
Yeah.
And you have to be flexible to succeed.
So it's not about finding some holy grail system that works in all market conditions.
Right.
It's more about developing a set of principles and then adapting them to the current environment.
Exactly. He's constantly learning, experimenting, refining his approach. Which underscores this idea that becoming a successful trader is an ongoing journey, not a destination.
Yeah, it's like being a lifelong student.
It is.
Always seeking new knowledge and ways to improve.
Absolutely.
I think that's a really important message for anyone who's thinking about getting into trading or even just, trying to manage their own investments.
Yeah.
There's no quick fix.
Yep.
No magic bullet. It requires hard work, dedication, and a willingness to constantly learn and grow.
You got it.
Dr. Elder reminds us that trading can be a path to freedom, but it's a freedom that comes with responsibility.
That's right.
It's like the freedom that comes with being your own boss.
Yep.
It sounds great in theory, but it requires discipline, self-motivation,
for sure,
a willingness to put in the hours.
Absolutely.
So as we wrap up our deep dive into Dr. Elder's the new trading for a living, what are your biggest takeaways?
I think for me, it's that emphasis on self-awareness and the psychological aspects of trading.
Yeah.
Understanding your own strengths and weaknesses, managing your emotions, and recognizing that even the best traders make mistakes.
Absolutely.
It's how we learn from those mistakes that really matters.
Yeah, for me, it's the importance of understanding yourself as a trader, your strengths, weaknesses, and those emotional triggers that can sabotage your decisions.
Yeah.
And then, of course, there's the idea that trading is a continuous learning process.
It is.
There's always something new to discover, something new to improve.
Couldn't agree more.
Well, on that note, I think it's time to bring this deep dive to a close. But before we go, I want to leave you with this final thought from Dr. Elder, and I'm paraphrasing here.
Okay.
He says, "Trading has made me free. What kind of freedom could it unlock for you?"
That's a powerful question.
It is.
It challenges us to think about, what we truly value and how trading or any pursuit that requires this level of discipline and self-mastery can help us achieve those goals.
So until next time, keep learning, keep practicing, and never stop exploring this fascinating world of trading.
See you next time.